Tiger Brands. This is the company which stretches all the way from Albany bread, as well as Ace maize meal, right through to making things like a branded Energide and Jungle Oats bars, like sweets, that kind of thing, and a whole lot of other things in between. Market capitalization of the group after quite a tumultuous period of expansion into West Africa and then withdrawing is 70.7 billion rands. So that's a big boy. Price to earnings ratio 19.29, dividend yield 2.64. Give us an update of the last sort of 3 or 4 years here, particularly in reference to that Nigerian escapade.
Yeah, I mean, it was, as you say, very, very tumultuous for the shareholders. I think what Tiger Brands and the former CEO Peter McClary did is they took a big bang approach to expanding into Africa. We didn't see him making small deals and growing that business. We saw them taking out the big guns, going to East Africa as well as West Africa. And I think what really hurt them was the expansion into Nigeria. And of course, the 65% acquisition of Dangote flour mills. I think that was the acquisition that hurt them. So I think the expansion was too fast, too quick. A lot of questions were raised about the due diligence in Nigeria.
Yeah, because it turned out to be a disaster, both with regard to sort of internal controls. There were dramas around procurement and all kinds of skullduggery going on. But in addition to that, then the Nigerian economy basically went into a deep dive because of the weak oil prices, that being a resource-driven economy. So, but they've cauterized that, right? They basically wrote it all off, sold it back to Dangote and said, we're out.
Yeah, so completely traded out of that Nigerian business. But then I think, once again, another scandal was in Kenya, in the East African business, where management, in order to achieve some sales target, was really upfronting some sales, and there was also some corruption and some fraud going on there. So it really hasn't been a good time for Tiger Brands in Africa.
Let's see how that's reflected on the share chart, though, because you can see the trouble starts in about 2013, 2014. It sort of picks up, goes down. But in 2016, it's actually been quite a strong performer. And that's in part because Matlare has left, Funko Ngadaro, the CFO, has left, new CEO Lawrence McDougall has been appointed, and then Noel Doyle has been brought back as the CFO. So it kind of feels like the market is saying, look, the core business is doing fine, the forward prospects look better, and the management team that's in place now is fresh and ready to go.
That's right. So I think the market was really reassured by an appointment, an external appointment.
Yeah.
So Lawrence McDougall come from Mondelez.
He was at Mondelez, which is an offshoot of International Food Group. But is he South African, or he's had South African roots before or something? So he knows
was born in Johannesburg.
Ah, well, there you go. There's no burger like a Joe burger.
And he was in charge of, I think, the Middle East, Eastern Europe and Africa for Mondelez. So I think he understands the market really well. And Mondelez also went through quite a tough time. So I think the Tiger Brands board really saw that experience that he had, and hopefully he can be a good appointment.
But at the same time, Noel Doyle, who was the CFO back in the day and then was temporarily Chief Operating Officer and so on and so forth, that seems like a good idea because he's well regarded in the industry and knows the business with a fine tooth, the whole corporate structure.
Yeah, he was interim CEO for quite some time, until Lawrence was appointed, and I think the market trusts him. So I definitely think the management teams and the appointments that we have seen is a positive.
What about the input prices? Because in preparation for the show, what I was trying to do is work out what local maize prices have done. And the takeaway was they've been quite volatile because there's a global maize price, then there's the rand price of maize, then there's the local crop, and then the currency. Because that's an issue for them. If you're selling maize meal to ShopRite and you're selling millions and millions of tons of that, that's all very well. But if you can't control the price there and you're worried about price margin issues, but you're being squeezed back home because the maize prices are either up or down, that's a bit of a business risk issue.
It's very risky. And of course, you can't control those inputs. A lot of it is weather related. So of course, with the drought that we have seen, the maize prices have shot through the roof. We are starting to see some rainfall, so hopefully this will aid some of these food producers, and hopefully we will see a lower maize price.
Yeah. Okay, well, let's get to brass tacks about Tiger. It's in a recovery. It's now the largest player. It's got a great brand portfolio. We haven't even touched on their value-added meat products, which is, the S-Core business that sells bacon and sausages and what have you, enterprise. It's got personal healthcare products in there somewhere as well. It's got all those branded food stuff, which have got fabulous margins, all of the beverages and all of the prepared foods and all that. hot or not? I mean, it's a timing issue. Is it looking attractive for you now?
Attractive, not so much at these levels, but I do like the business long term. So I think if there is a sustained pullback in the share, I would go hot on it.
But right now?
Not hot.
Not hot on account of price. Okay, well, I'm going to tip hot on that one.